name is Gianna, and we are group number 6, and for our analysis, we did electronic arts and DOW chemical. So electronic arts is an established interactive software gaming system, and it has 3 segments, being EA Games, EA Sports, and EA Play. DOW Chemical is a multinational corporation that has several product lines, including architectural products, chemicals, and performance plastics as well. Overall, EA's executive management has backgrounds in technology, telecommunications, and media companies. And in the background of executive management for DOW, a lot of them are independent directors and have roles in manufacturing, engineering, and business management. So for the first threat that we talked about last time is the threat of new entrants for EA, and it's high. However, we're able to stay relevant with the competition by continuing to introduce new products. So the threat of new entrants for DOW is low. The cost of entering a new company being introduced in the market is high. So there's many established big businesses already in the industry, so it would be difficult for a new small scale company to enter and be successful. For the threat of substitutes for EA, it's low because there isn't such an advanced technology on such a smartphone or tablet that is competitive enough to compete with EA's gaming experience. And for the threat of substitutes for DOW, it's low because buyers need such a specific type of chemical composition for their product, and they already know exactly what they want, so switching and trying other products would just be a waste of their time and money. Okay, so for the bargaining power of buyers for EA, we assess a medium to medium high risk because there is low switch cost and there's also many substitutes. However, there is low backward integration and low purchase volume per customer. And then for DOW Chemical, there is a low switch cost as well, and there's a lot of intense rivalry with competitors. That increases risk. And then on the other hand, we have the absence of substitutes, and customers generally have to agree to a long-term customer contract, which reduces this risk. So we assess the medium risk for power buyers for DOW. And then the bargaining power of suppliers for EA, we assessed as high because EA has many suppliers, and so suppliers in more niche markets could have more power over their prices. And for bargaining power of suppliers for DOW, DOW requires supply of raw materials, which will fluctuate with the economy, so that could be risky. And then there's a lack of substitutes and a lack of difference between all the different competitors, so this leaves us with a medium to medium high risk.
Rivalry among existing firms for EA faces a high risk because EA faces competition from all segments of their operations. If they do not continue to develop consistent, high quality, and well received products and services, their revenue margins and profitability will decline. The risk level for DOW is high. DOW faces competition from all segments of their operations as well. The company competes on the basis of technology and trait leadership, price, quality, and cost competitiveness. Key competitors for DOW is BASF and ACCTG. Overall, both companies have a medium to high risk. However, they are able to accommodate through the competitive strategy of product differentiation. Based on the risk EA faces, their competitive strategy is product differentiation. DOW's competitive strategy analysis is both product differentiation and cost leadership. The company competes on different levels depending upon which segment they are dealing with. For example, some of their agricultural products have unique performance characteristics that are required by certain customers. As far as cost leadership, many products are commodities, therefore they are forced to be priced.
So now moving on to our financial analysis, the ratios we chose to analyze are return on equity, operating return on equity, gross profit margin, EBITDA margin, debt to equity ratio, and inventory turnover. So for the first one, return on equity, it provides an indication of the firm's performance and how well the managers are employing the funds invested by the firm's shareholders in order to generate returns. And the average number for this is usually about 10%. So here you can see that DOW's ROE stayed positive for the last 5 years, yet EA's ROE had a lot of fluctuation throughout the 5 years, even with a negative number in 2011. Therefore, that shows that DOW has had a positive performance from their overall firm, and they're continuing to perform and employ funds for their shareholders. However, EA had a weaker performance in 2011, but they tried to pull through and maintain a more positive performance towards the end. But overall, they didn't have as strong as a performance as DOW. And then for operating return on equity, that measures the profits based on solely operating income. This fixes like the noise in businesses and explains how profitable the core business is in any given year. Similar to the ROE, EA and DOW performed about the same in comparison. DOW remained around 20 to 40% for OROE, and EA tended to be more around the ranges of negative 12% to 30%.
All right, so the next ratio that we decided to look at was the gross profit margin, which is used pretty much to measure the effectiveness of the firm in their operations. The gross profit margin is going to represent the firm's ability to develop from its core processing activities. So the ratio demonstrates company's ability to create profit from production of the firm's product or service. So in these calculations, EA has consistently had a higher reported gross profit margin than DOW. This is because EA requires a lot less raw materials in order to produce their products and services to its customers, whereas DOW needs to acquire large amounts of raw materials as well as a lot more assets to produce its stuff. All right, and after that, we decided to use the EBITDA margin. Specifically, we use that because DOW listed that as their proprietary way of tracking performance and profit. This ratio is important because it focuses on the cash elements of operating activities, and it takes away, dissimilar to NOPAT, it takes away depreciation and amortization. From this analysis, we recognize that the difference in DOW's margin becomes less attractive when looking at off-balance sheet type data, because they have a lot of assets with depreciation and amortization costs affected with those. All right, so next we then use the debt to equity ratio to further analyze the companies. The debt to equity ratio is significant and provides a measure of how much skin in the game the owner has compared to how much debt that they have to finance their total amount of assets that they hold. So in this case, DOW carries a lot more debt than Electronic Arts. The reason that DOW can carry a lot more debt is because the industry that they're in is very more regularly a cash flow operating type business, whereas EA is subject to a lot more risk and competition in their technology industry, so they can't have debt financing as much as pure ownership. And finally, we use the inventory turnover ratio. This is going to measure our company's ability to take raw materials, just basic goods, and turn them into that product or service. So looking at the numbers that we had here, we saw that EA had a much higher inventory turnover ratio than did DOW. Again, this is going to have to go back to the type of materials that each company uses. EA being an internet-based firm, they don't have the raw materials that DOW needs because they take all those raw goods, process them in all their different plants, and then sell them and distribute to their consumers.
Okay, so next we analyze the earnings per share. Earnings per share is just the net income minus dividends on the preferred stock over the average outstanding shares. So it basically just states the amount of profitability a firm has based on the amount of profit appropriated to each stock that it has issued. So EPS highly fluctuates with DOW, as you can see on our graph, much more than EA. However, DOW overall had a much higher EPS. EA has slowly grown, or had a slow growth over the years from 2011 to 2014 and had a large increase in the year 2015. Based on this information, EA had a lower profitability in the last 5 years, but surpassed out in the year 2015 due to their success with their new products. And then price to earnings ratio is calculated as market value per share over earnings per share. So basically this price per earnings ratio tells investors how much they would need to invest in order to earn $1 of the company's earnings back. So a higher PE ratio generally indicates a higher expectancy of higher earning and growth, while a low PE may indicate that a company is either undervalued or is doing better than it has in the past. EA had a drastic increase, as you can see, in the year 2014, and then dramatically decreased in 2015, and this was due to the release of their game FIFA World Cup Brazil that came out in April 2014, and then Dow has remained fairly consistent with a very small spike in 2012. And then for the stock price graph analysis, this is just a comparison of how valuable the company is compared to their competitors. So the competitors for EA are Sony, Activision Blizzard, and Nintendo. EA is pretty relevant with their competition. However, you can see Nintendo is much higher than the competition due to the release of a lot of successful games in the year 2015. And then this is the stock price graph analysis for Dow Chemical. As you can see, the graph analysis for Dow is lower than its competitor, BASF, but higher than that of Sinopec. And then this is just the historical stock prices. So it's pretty self-explanatory. The stock price of EA took a dip in 2012, but on average it had a 16% gain between each year. And then Dow's stock price steadily increased from years 2011 to 2014, but took a slight dip in 2015. Dow only had an average gain of 5.4%, but the price of Dow stocks were higher than EA's with the exception of the year 2015.
EA sales have continued to increase year by year, and their cost of goods sold and operating expenses have remained constant. Because of these trends, we have forecasted net income to increase. Dow had lower sales in 2015 compared to prior years. However, they did manage to decrease their cost of sales, which in return increased their gross profit. They also managed to decrease their operating expense. Following 2015's trend, we have forecasted sales to increase by 12%. We have forecasted EA's 2016 EPS to be 30 cents, and we have forecasted Dow's EPS to be $1.91 because they are merging with DuPont, another mammoth chemical company, causing their income to increase. EA recognizes all of the revenue from bundled sales, a deferred basis over an estimated offering period. The related costs of revenues are expensed and incurred instead of deferred and recognized ratably. EA regularly reviews inventory quantities on hand. They write down inventory based on excess or obsolete inventories determined primarily by future anticipated demand for their products. Their inventory valuation, they use WACC. Their allowance for bad debt, EA, is much higher compared to Activision Blizzard. Off-balance sheet obligations, as of March 2016, they did not have any. Dow evaluates and recognizes revenue when all four of their following criteria have been met. Evidence of an arrangement, fixed or determinable fee collection is deemed profitable and delivery. Dow switched from FIFO to LIFO, which caused major changes. For example, the reduction of certain inventories resulted in the liquidation of some of the company's LIFO inventory layers. For instance, increasing pre-tax income by $3 million in 2015, decreasing pre-tax income by $23 million in 2014, and increasing pre-tax income $55 million in 2013. And the reserves reducing inventories from FIFO basis to a LIFO basis amounted to $8 million in 2015 and $569 million in 2014. The company holds variable interest in joint ventures accounted for under the equity method of accounting. In 2012, EA had the highest sales in North America, with Europe following close behind. In 2015, EA saw more international sales than they did in North America. It is important to note that EA formerly recorded Asia and Europe separately, but in more recent years, they have been recorded together under international revenue. International revenue has performed more steadily over the past 5 years, where the revenue in North America had a small spike in 2012 and again in 2015, but continues to sit below international revenue. Product revenue follows the same trend.
Okay. So this slide talks about the segment of information for Dow Chemical. Taking a look at this, we can derive that Dow is an international company that delivers products to customers in over 180 countries. In 2015, Dow derived 65% of its sales and 38% of its property investments outside the United States. However, when you take a closer look at their sales volume in other countries, it indicates that over a 5-year period, sales have actually been negative. And this is just continued segmented information for the years not on the previous slide. And you can note from this that out of the 6 operating segments, DOW saw the highest sales in their agricultural segments.
So this slide is about the executive compensation. And for this, the CEOs of both EA and Dow Chemical make significantly more money than their competitors' CEOs do. So as of year 2015, the CEO of EA, Andrew Wilson, made $11,634,890, and the CEO of Dow Chemical, Andrew N. Liveris, made $22,153,610. And so their competitors for EA are Sony and Activision Blizzard, and they made around over $1 million, but still not as close as EA makes with the $11 million. But for the competitors for Dow Chemical, they are foreign companies, so their compensation is a lot lower for those CEOs, but that could be due just because they are in a different currency. So this could be due to the lower rate and also because of currency exchange rates as well.
So after taking all this analysis between both EA Games and Dow Chemical, the company that we would choose for the long term would be Dow. The reason for this is that we think, based on their operating, financing, and investing, that they assess their strategy better to the 5 forces than EA Games does. First, the reason why is we have to relate to the merger that they're going to be going into with DuPont Chemical. This is going to also block new entrants as well as provide cooperation amongst the existing firms, allowing them to distribute, produce at a better, more effective price. Next, Dow Chemical has seen better and more consistent cash flows than EA Games has. This has to do with the type of industry they are, seeing that Dow is a raw materials producing and manufacturing based company, whereas EA is a technological based company where innovations can, play a factor as far as how successful you're going to be and how your cash flows are going to be affected throughout the future as well. Also, looking into the ratios themselves, Dow has been found to be better performing in different areas and aspects over EA. Specifically, Dow Chemical has made better improvements in their gross profit, their operating return on equity, as well as their operating return on assets. This means they're doing very well as far as using their debt and their equity to process their assets in a way that will grow and expand their company. Otherwise than that, Dow happens to be just a bit more differentiated. It's across the globe, and they have connections in far more industries and areas as well. Once again, we thank you for your time. Appreciate you joining in.